All right, so good morning. I just wanted to thank you guys for coming. I'd like to just go over our trading system for scalping real quick. I'm going to go over, whoa, sorry about that. I don't know what the heck happened there. I'm going to go over quickly just the what we define as trend, counter trend, or trend, and the indicators again real quickly, and then we'll go into a chart and see what we can do to simulate some trades so that you guys can ask questions as we take the trades, and move on from there. So this screen I have up right now is a typical trend up screen where the 200 is below, or everything is above the 200, and the 10 is above the 30. So this is what we would consider a up trend. This is this is what we would consider a downtrend, where I spelled that wrong, but that's okay. I saw that, sorry. Where the 10 is below the 30, which is below the 200. That we would consider a downtrend. All right. We also have other where did I put it? Sorry. Downtrend. We also have a inside and outside bars with trend. And what an inside bar is basically the inside bar is marked, where when it's marked, it's because it's inside the previous bar. So this is considered an outside bar, an inside bar. This bar is an outside bar because, again, it's the previous bar is engulfed in that candle. This is an inside bar, this one here, because the previous candle was bigger and this candle closed inside that candle, creating an inside bar. So this is a trend, long entries with a trend up. We have can you guys still hear me okay? Oh, okay.
I hear you fine.
Good. This is a inside and outside bar chart where in a downtrend. So this would be a downtrend for taking inside and outside bars. Again, the 10 is below the 30, which is below the 200. Therefore, it's considered a downtrend. And the inside bars, as long as they are below, and they stay below the 10 and the 10 and are marked, they would be considered an inside and outside bar below the 30. We also have when we're looking at our trend up indicator, we're looking for signals off of our indicator, and basically we get a signal here in an upward trend where the candle has come down below the 10 closed below the 10, and then come and closed above the 30. Once that candle has closed above the 30, the following candle, if it breaks, or the following couple of candles, if it breaks above the 30, that is, the 10, that is qualified as an entry for us. So in this situation right here, this candle did not break above the 10, but the following candle did. We will go a maximum of 3 candles from the signal to validate the entry. Any more than that, the likelihood becomes weaker that that signal will be a qualified signal. So the very first signal is like, call it an 80%. If it breaks above, the second one's a 60% if it breaks above, the third one a 50, 60% if it breaks above. Okay. The same thing goes with a trend down signal. We have where the 10, the candle has broke above the 10 closed, and then the next candle has broke below the 10, giving us a signal to go down. Once that candle is broke, it is validated as an entry to go short. So as an example would be this one right here. We had these candles broke above the 10 and the 30, came down, closed below the 10, and the 10 is still below the 30 here. Therefore, the next candle is a valid entry right here. So we would enter once this candle had broke the previous candle. So we should be in that entry, that trade right away, and down we go. Where we don't take the 10, the signal bar, is we don't take it inside the last 45-minute candles. So the 45, the 50, and the 55-minute candles of any trade. So we have this signal candle here. Likelihood it was before the 45-minute candle, which is marked. It didn't break. The following went up, didn't break. The next one did break. Therefore, it would have been a valid entry if you had entered it here and got out right away. I have been noticing that any entries with regards to the signals within that 45-minute candle, 50-minute candle, and 55-minute candle are not a very solid trade. They work out. I would say, I haven't done all the numbers, but I would say at least only about a third of the time that they work out. All right, and then so that's then we have inside outside bar short. Okay, so here I think I already showed this one. There's the inside outside bar short with trend. We take the entry as it breaks. We have noticed inside the wiggle that all inside bars, or not all, most inside bars are very successful inside that 45-minute wiggle, where outside bars are not very successful inside that wiggle. So, and that is the same whether it's long or short. So if it's an uptrend or a downtrend, then the number has been pretty much the same. Okay, so just before I move on, I want to know if there's anybody has any questions with regards to this. Anybody? No? Okay. Oh, Ray. Go ahead, Ray. You'll have to unmute yourself. Go ahead. Uh-oh.
The wiggle is the last 3 or 4 bars at the top of the hour, correct?
Correct. They would be the 45-minute candle, the 50-minute candle, and the 55-minute candle. Okay? Any other questions? Okay. Well, I'm going to move on to a chart here. And we'll turn this scroll off and move back a few days, a little while. Now, we normally only trade from a little after New York, or a little after London open, so preferably actually after Tokyo close till around lunchtime New York, which is London close. So so here I'm going to start here on, I guess this is January 16th. We're just after Tokyo close. We have a outside bar with a signal here where we have a downtrend happening. You can see that we've had a downtrend for quite a while. It is above the 200. So if you would consider a 200, as long as you're far enough away from the 200, it's still a valid trade for the 1030. So we don't have a we ended up getting we don't have a valid entry here because the following candle didn't break below, and the next candle didn't break below. Okay, we had an inside bar on the very next candle, so we would now be looking for entry off that inside bar instead of the outside bar being the qualifier. 2 candles later, we got a outside bar break of that inside bar, plus a signal, plus the stochastics is turned over and is heading downwards. That's a very strong signal. So I'm going to mark that spot right there as an entry. Okay, I'm there, and then we now are in the trade. The trade has been triggered as a successful entry. Now our goal here is to shoot for anywhere between 3 and 5 pips every trade. So when we enter in this trade here, what we're looking for is the stop loss to be at the next swing high, which are these Ames boxes, which I guess I didn't talk about, and I apologize. The Ames boxes are a series of swing highs and swing lows of 5 candles. So we're looking for the previous swing high, which would be right here, 9 pips. That would be our suggested stop loss, and our suggested take profit would be 3 to 5 pips. So we're in the trade. We have entered it hopefully as close to this mark as possible, and we now have our 3 to 5 pips. So that was a successful a successful trade. Okay. Any questions on that trade?
Yes.
Go ahead.
You showed your entry at the base of that candle there. Shouldn't have entry been the inside candle to the blue one to the right? Because you've received an inside candle. Wouldn't that be your entry point now there?
Yes, it would. Thank you. That's a valid entry. However, if you had missed that entry, this would also be a valid entry.
Thank you.
Okay. So that is a valid entry, and this is a valid entry. No, thank you. All right, so now we're looking for the next. We're in the wiggle. We're coming on to the 200 in the wiggle. There's an inside bar here in the wiggle. Yeah, it didn't break. It didn't break. It broke here. All right. So that inside bar broke there. So we have a valid entry right here. Okay, that's a valid entry. Oh, come on. So we would take that entry. And again, our stop loss should be established to the next Ames box high, which is 9 pips, 9.5, and then our take profit of 3 to 5 pips, which we are better than 3 to 5. There's 6 there. Okay.
Okay, David, on the Ames box, measure the stop loss again, if you would.
Oh, sorry, it's this previous box. I apologize. So it would be 13.
Okay. Yeah, and as that moves down, you can bring your stop loss down with the established swing highs there.
Sure. So if you're looking to continue playing this longer than the 5 pips, you can do that. You can bring it down some, and then I mean, if you're wanting to do one trade at a time, yeah, we can do it. When we're flipping through trades, it's really hard for us to establish that, because it's always so fast. So here I've been lately just putting trailing stops in. So that move there was 15 pips, and I would have had a 4 pips trailing stop. I would have now got 9 pips off of that. All right. So here we have.
So we had the entry was off the inside bar.
Right there, yes.
Yeah. Okay.
Okay. Oops. All right. So again, here we have an outside bar. It didn't break, but we have a following signal is an inside bar. That inside bar did break. Your stop loss should be 20 is pretty high, but if you're looking at maybe the 200, you have to have the previous Ames box is 24. That's pretty far to go for a stop loss. I know I've got caught in higher stop loss situations, and they've burnt me. One of them was actually yesterday. So so I would probably I would measure that and probably suggest that the stop loss be at the bottom of that previous swing box, which is more palatable, which is about 13. So But as it goes, we are we've got our 3 to 5 and we're out. Anyways, we now have another signal here, an inside bar, inside the 45, inside the wiggle. All right. Oops. F12. Okay. So it did break. It is a valid entry. Our stop loss, again, if you're looking at that's a pretty high, that's 30 pips. That one's 22. Again, I would probably, because this swing high and swing low has already been established, I would probably look at putting it around the bottom of the swing, or look for a better position of support and resistance. So the bottom of the swing is a support and resistance position. I would enter that there, take it, and that was another successful trade. You got your 3 to 5 pips. Yep, and you're out. All right, we have an outside bar situation here. Pretty big bar. We also now have an arrowed bar right after it. All right.
So you wouldn't take that. You wouldn't take that outside bar.
It hasn't broke. It has no. I wouldn't take that outside bar long because it's not in.
Yeah,
it's not in.
with trend.
It's not in direction with trend. But if we're looking at it, that's where our signal would be until we got the next candle, which is actually here. Okay, we got a signal candle, and it did break, so we are now in that trade. Again, now your stop loss should be, well, we're looking at 30 some odd pips, so if we go to the bottom of the box, we're looking at 10, 11, 12 pips here to a gain of, it was a successful trade, so we got 10 pips here based off of this, where did we get 10? Sorry, I measured the wrong spot. Yes, we got, 9. Again, get in, get out.
Can I ask a question?
Sure, go ahead.
On that last one, you mentioned that you didn't take the trade because it was against trend.
Yes.
To the left.
This one.
Was it?
This one.
Okay, I thought it was the one after that wiggle.
No, inside the wiggle was a inside bar in the wiggle, and it was it triggered right here.
Okay, so that's an entry.
That's an entry, correct. Okay. So let's keep moving. Okay, we have a inside bar here. Our MAs are pointing up. However, our 10 is not above our 30. Therefore, it's not a. Therefore it's considered a counter trend instead of a trend trade. And we're for higher probabilities, we're sticking with trend trades. So that is a no trade. Okay. And we now have a long signal, or sorry, short signal right here. All right, and that's a signal. So that's a validated signal. We're now looking to, sorry, that's a signal. We're now looking to validate that signal, which the next candle we validated that signal. Our stop loss, would be 15, and obviously our take profit 5, and we got that on the very next candle. Okay. We have a inside bar here. Is anybody keeping tally on how many we've got so far? I think we've like 7 or so. We have an inside bar entry here. Okay, it was validated by the next candle. All right, and our stop loss would be 24, which is pretty high, so our stop loss, if we look at the bottom of the swing, will be should be 12. Our take profit 3 to 5. You got a little bit better than 4 there. If you got greedy on that one, you got you got stopped out on the next candle here. And it happens, you know. Okay, we have a signal candle here. So this outside bar is going against trend. This outside bar is going against trend. Therefore, they are counter trend trades and not part of the trend trading. You know, they are entries, but they are riskier entries than the trend trade. Okay, we now have a valid entry here. We got a signal. We got confirmation on it on the very next candle. And again, we're in for our stop loss would be 26, which is pretty high.
Okay, your stop loss on that would be the most current swing high.
Check.
It'd be over here, right above the signal arrow.
This one here, that wouldn't have been formed yet, would it? Yeah, it would have.
Yeah, but when after this one, the break bar hits it and closes, it would form that. So you could bring that stop all the way down to that.
Okay, because I was looking at it.
The swing high right above the signal bar.
Right, because there's your swing high there. 1 and 2, 2 before and 2 after creates the swing. So you're right. Sorry. So your stop loss would be 17, 18, and away you go. You've got your 5, 6 pips, 3 to 5 pips. We have another signal here. We're looking for validation. We got our validation. Inside the wiggle, it's still a valid entry. Okay, it's still a valid entry. I have noticed that the 40-minute candle is like a 50 to 60% on most charts or most pairs that I'm looking at. So if it's the very next candle, if it's the 40-minute candle, I'm probably going to sit on my hands. All right, but this candle was prior to that. It's good. Your stop loss would be, it's pretty high, 33. So establish a better stop loss, like the bottom of the swing, which is 12, and go for your 3 to 5, and you got it. We have an outside bar entry right here. All right. We have an inside bar entry, which, so we have an outside bar entry. There we have an inside bar entry which supersedes, oops, I'm cheating now, sorry guys. We have an inside bar that supersedes it. Two candles later, it broke and it was successful. All right, we have another inside bar here. 1, 2, 3 candles later, it did not break it. Therefore, it's not a valid entry. All right, we have an entry with inside the squeeze, which is a term a friend of ours came up with, Daryl. He, we notice the squeeze in here. It doesn't happen very often. We don't have any numbers on it as to whether or not it's a valid or not valid trade. It's a judgment. It would be a judgment trade. And obviously, if you had taken it by looking at what we see, we're successful.
Let's call it personal risk.
Personal risk. There you go. Anybody have any questions? No? Good. I like that. All right, so we have a signal bar here at the top of the hour.
Remember at London close.
Yeah, we're now at London close, so we should be, we should literally be done for the day. We've traded our, 5 to 6 hours of trading. 4 or 5 or 6 pair, got 5 or 6 signals on each of the pairs, at 5 pips each, 3 to 5 pips each. You should be very happy with your day's results. What ends up happening as soon as London is closed and going into New York afternoon is it starts to go sideways.
David Downs has a question.
Go ahead.
So I don't know if you gave the time on this, but all this is calculated off a 5-minute chart. So what happens, what are the probabilities if you go to a longer time frame, let's say a 15-minute chart? Can you show us the same thing on a 15-minute chart?
This doesn't work as well on a 15 as it does a 5.
Okay.
All right, throw up the 15 there, Dave, and show them.
All right, so let's go to New York. We're here, New York midnight. Okay, let's, all right, so here we are. You have one entry. Well, the inside bars work well on 15 minutes, but you have an entry here. Okay, on a 15-minute, oops, you have an entry here. It's inside the 45-minute candle, so therefore it's not a valid trade. But this trade here is valid, the inside bar. So you can take that and you can run with it. That's a 15-minute chart. But we only have one signal from London close or London open. Refresh. So we only have one signal from Tokyo close all the way through to London close. So the only entries that you would be looking at in this situation would be the inside and outside bars.
Okay.
There's not as many trades, and you're not going to get as many pips. If you do the process. If you do the method correctly on the 5, you'll get quite a few more pips than you would off of 15.
Yeah, if you're looking at if you're looking at only 3 to 5 pips per trade, you're not going to get as many signals in those entries. If you're looking for longer term trend trading, then you will. But as us being scalpers, we're looking for the best solution to get in and out of trades with the limited amount of risk and
David, have you tried to use this on a 15?
I haven't.
You haven't?
No.
I guess you could just just put the template on there and take a look.
Yeah. I
I
have
got to
noticed.
I got to the point on the 15 where I was hardly taking any trades at all. That's why I went down to the 5. So
I do look at my other chart if a 15-minute does come into play on a inside bar. I will wait for
it's good to look back.
I
It's good
will
to look
wait.
back or look up to the 15 sometimes to see.
Yeah, I will wait for a valid entry off of the 5-minute by looking at the 15-minute on an inside bar. Does that make sense? Can we answer your question, Dave?
Makes sense to me.
Okay.
Yep.
Okay, so and that's pretty much that pretty much goes with every pair. We can go through other pairs and do the same thing. The where it really becomes hard to trade this system and any system is when there's consolidation. When the market is not trending and not got a definite trend happening, and you've got a lot of sideways movement, sit on your hands as best you can. I know we use the expression in the room all the time, waiting for the paint to dry, but that's also waiting for, that's waiting not to give your money away. So, I get caught in it, Roger gets caught in it, we all get caught in it. We get caught in the when we're in a swing, our channel where it's just going sideways. It's just bad. It's just riskier. Let's put it that way. Just a lot riskier to trade if you don't have a definite trend. And we've now added this 40 moving average to help establish a trend. So if it's below the 200, that obviously establishes a longer term trend. However, we're looking to establish a shorter term significant trend. And as you can see here with this 40 that we have in here, that it's pointing down and everything is below it and it's opening up. So therefore, that's giving us a pretty significant suggestion that trend is going to continue to keep going down, and it does. And as it starts to come up and go sideways, the MAs are getting closer together. Plus, they're getting closer to the 40 and closer to the 200.
But in the room, we just trade the 5-minute. So.
Yeah, we just trade off the 5. Okay. Anybody with any questions? Okay, Mr. Fan, go ahead.
Yeah, you didn't mention about the stock.
Stop loss?
No, stochastic.
Oh, I did not mention the stock. This.
I had a question about the stock. Just the question number 2. How much weightage do you give the stock when everything else is set up right?
Price action supersedes everything.
All right, cool.
We started yesterday trying to use a 10-3-3. I've been using an 8-3-3 just out of habit over the years. And David asked me to try the 10-3-3. So you can put that on a 5-minute, Dave, and let's take a look.
I have it here.
5-minute?
Yeah.
Okay. And so there you can see a real retrace, and then and he uses 3 levels, a 20, 50, and an 80 level. And Dave likes to wait. Is this right, Dave? You like to wait for the stock to be in the 50 range before you take short or long on them?
I like it to be between the 80 and the 20. I also like I watch that, if I see in the past that I've had some bounces off of the 50, I'm thinking that I'm going to get a bounce off the 50 again, which, we got here. It came down to the bottom over here on this. It started coming up. We got a bounce off the 50. Therefore, that's to me, that's a valid entry. And the good thing that I see with this is that the stock has just turned right at the candle. So the very next candle I'm in, it's crossing over and doing its thing, right? So the stock is a lagging indicator, no matter what. It's there. It's got good confirmation for when it's turning, and we do put weight in it. That's why we have it on here. But I also, if it's not pointing in the right direction, and I have some serious strong action. Like on this candle here is an example where here at London close. All right, I've mentioned it in the room a number of times where if that's a really big candle, I'm waiting for at least even though I might have an inside bar here, I'm hoping for a small retracement, at least 50% of that big candle,
right,
before I'm somewhat comfortable with that trade. So would I have waited to here? I'd have to take a look at my trades, but I probably would have waited to this candle broke, the third candle broke, to go short. Again, I'm looking at the whole chart, so I'm kind of cheating in that respect. But I've let a few inside and outside bars go, especially since I see a bigger candle in front of it, or behind it, sorry. So I would have let this one go until it came back and it had retraced at least. So I knew on this one here it would retraced at least 50%. And if this candle here had broke below that inside bar, I would have been all over it on this candle here.
Yeah, if you've been trading, because that's after London.
I know. I'm just using this as an example.
But, yeah.
All right.
Thanks.
Okay. I mean, the rules are fairly simple, fairly straightforward, and I posted my results yesterday of every trade that I took. I got burnt hard once because I didn't follow my own rules. Plain and simple. I posted it. I was up over 100 pips for the day, and I remember early on in the day saying I don't want to trade the pound dollar. I wasn't going to trade the pound dollar. I then, for some reason, took the pound dollar, and against my own judgment, because my judgment on the pound is that it is one of the strongest pairs out there. If there's got to be a retracement of that huge candle, and I didn't follow my own rules. I should my main rules are, if I should have stuck with it, and I should not have taken that trade. It was consolidating for a long time. After that candle, it consolidated for ever. I should not have entered any of this trading in this zone right here, because it's just done nothing. Let the pair break one way or the other and come at least 50% of this candle back before it starts making its decision. And I didn't do that. I ended up getting in a trade off an inside bar right around 15, right around here. A couple of times, I got, there was 3. So I could have got out with 3. I could have got it with 4 actually, but I didn't, and I ended up getting out right here. I lost 34 pips doing it. Where are you? 15, yeah, right there. So I ended up losing 34 pips because of it. I got out right around here. So, you know, I feel bad that I lost that big of a trade, but again, it just comes to following the rules. You know, and if the market is consolidating, stay away from it. If until you get a definite change of trend. And I mean, that's really all I can say about that. So
David's got his hand up.
Go ahead. He did? Yeah, go ahead, Dave.
Maybe they doesn't have a question.
Oh. Maybe that was an earlier question. I don't know.
Yeah, no, I'm good.
Okay. Any other questions, guys? Larry, any comments, questions?
No, I'm fine. Good job. I appreciate it.
Chris? Comments, questions?
How about you consider double bottom? You consider double top, double bottom? I just don't care.
No, we don't look at double tops and double bottoms in the method. I mean, you can look at them if you're so inclined, but that's not part of this trading system. This is very, very simple. Keep it simple, stupid. Basically. And if you follow the rules, you won't get burnt. You will make money pretty much every single time. Not maybe every single trade, but you might lose 2 or 3 or 4 trades in a row because you're in consolidation. But if you're in a solid trend, there's no reason that you shouldn't make pips on pretty much every single signal of some sort.
All right.
Okay. Anybody else? Mr. Fan, any questions?
Nope, I'm good.
Ray raised his hand.
Ray, go ahead.
Obviously, we're not going to trade in a consolidation. What if at the end of the day you've missed out London U.S. sessions where you've had some really nice trends. You're going into the the Tokyo session where you get some decent ranges or whatever. I mean, are you going to trade in those ranges, or are you just going to stick strictly with the trending time slots?
Well,
in that Asian session, are you the only time I've ever traded in the Asian session is after the Tokyo Open. I think that's 6 o'clock Central, 7 Eastern, and the only thing you trade there is it's got to be just a hardcore trend trade with me.
Okay.
There's no guessing or anything. It's just got to give you the perfect signal before I'll trade it. I don't. I look at it, but I don't make a habit of trading it. Like when the yens take off or something like that, or the Aussie takes off, I'll wait for an inside bar with trend. That's about the only time I'll do it. Just when I get an inside bar set up with trend. That's about the only time I'll take a trade in the Asian sessions after the Tokyo Open.
Okay. Yeah, and plus, I mean, you don't want to trade yourself out too. I mean, trade you could trade 18 hours a day, but that's just not that's not going to be successful for you. You're going to end up burning yourself out and not getting anywhere. Okay, Nick, how about you? Any questions?
No, good. I'm good. Other than basically, you guys are saying is you found the most productive time period is the UK sessions, the Euro sessions.
Well, the best trends you're going to find are going to be in the New York session. When you have that overlap of New York and London.
Mm-hmm.
So we try not to start till after Tokyo close. And one thing you can watch on the Tokyo close, right before the Tokyo close, they'll run it up in a direction, and after the Tokyo closes, it'll reverse. That happens on a lot of opens and closes that I've noticed.
Okay.
So don't be taking trades right before Tokyo closes or London close. Well, I don't. When London closes, I'm done. Probably usually before then. So.
Well, I'm just trying to justify what you guys think is the best trading period.
Yeah,
start
you
looking
can
at
go on the you can take the London Open and just absolutely only trend trade off the London Open, and if you don't get one, you're going to have to sit there for a while. Because usually after London Opens in that first move, they'll set a direction usually on that first move if they're going to set a direction. Most of the time it just goes up and down, up and down, up and down. They're doing business transactions and stuff.
Yeah.
When they first open, and it just pops up and down, and then usually after Tokyo, lots of days it'll trend off the Tokyo close, and usually in New York, it's usually a trend time. So a very good trend time. So especially on the yens, if they start trending, you can sit on them the whole session.
So, all right. So during when you got the two sessions overlapping, you find is one of the most productive.
Yeah, it's very liquid, and usually by then they've got their trend set, which way they're going to go. And I heard a new term that I've heard. Well, I heard this term again this week. It was called London pumps and New York dumps. So usually New York is the opposite of London. So the London guys will pump it up. When they get to the New York Open, after about an hour or so, they'll take it down. So,
okay.
you see that a lot. See that a lot.
Okay. Anybody else before I close this out?
I'm good.
Okay. Excellent. Well, okay, guys.
I'm all good, thanks, guys.
All right. Well, I mean, it's just basically review, and I don't mind doing this quite often because the more I do this, the better I get at it as well, and hopefully the better you guys get at doing it. The one thing I want to add, and that's just mostly for the new guys that come in, is don't overtrade. Don't overtrade too many pairs. I mean, Roger and I trade a lot of pairs because that's what we're used to. When I first started using the system, I was lucky to be successful with 3 pair at a time till I got it. And then when I got it, you can add a couple more pair on because you're not going to get every single move. All right, and you have to train your eyes to see the move. Most important. I mean, you have to, and when you're flipping from chart to chart to chart to chart, that's hard to do unless you've got the system down pat. Okay. Otherwise, you're going to end up you're going to end up stressing yourself out. You're going to end up getting a few trades on one pair and missing a few trades on another pair, and getting a couple trades wrong on another pair, and then after the end of the day, you're going to look at it and go, man, this system doesn't work. Well, honestly, it does work. but you have to practice it and stick with only a couple of pairs. Go ahead, Mr. Fan.
All right, I got another question. Because I saw you trading a few pairs at the same time. Is there? I mean, if you have the price action and everything is the setup is very good, you just take the trade for as many signal that you get. Is that right?
No. No.
Okay.
I will trade. Depending on the size of the account, I will trade up to, I think the maximum I'll put up there is probably 6 or 7 trades.
Okay.
And Roger and I were talking about this morning because I wanted to confirm what I was already doing.
Okay.
If I'm taking for an example, a $10,000 account and I'm trading it, I'm not going to trade any more than 5 or 6 single lot sizes in that account.
Yeah, that's when you have that high leverage.
When I have the high leverage, yeah. So you have to be careful and be choosy as to what trades you take. Right? Like I have, my leverage is 200 to 1, so I'm trading $2 million, at a given turn. So just I would say trade where you're comfortable. Don't trade full lots when you should be when you should be trading a 0.01 and a 0.02. You'll get it. You'll get it. You'll look and say, okay, man, I've done it, guys. Honestly, I mean, I'm sitting here and I'll be trading a 0.1 lot for 8 hours and say, man, I made $20 for the whole day. Well, don't get down about that, because that's $20. And for the same fact on that is you're learning, and you're trying to you need to learn, and learning costs time, costs money, and just the more you practice, the more you practice, the more you practice, and you'll succeed. And as your account slowly starts to grow, or you start adding to your account, then you can, once you've got it where you're perfecting it 80% of the time, then slowly increase your lot sizes until you're comfortable. But don't ever put yourself in a position on a trade where you're going to sit there and go, oh my, what have I done? What have I done? And then all of a sudden you're making bad judgment calls.
Mind if I make a little recommendation?
Sure.
What I found sometimes, if you're setting yourself a bit of a goal, say on a $10,000 account, say when I make 20 pips on a one lot, I call it a day. Now you've done 2% on your account in one day. If you set that goal and just be satisfied with that, and compound it, you slowly increase your lot size and still say, I'm happy with 20 pips, now I'm making 4% a day. So on and so forth, if you understand what I'm trying to say.
Yeah.
Don't be over greedy in trading. Setting a limit sometimes is the best thing. Get your 20, okay, we'll play golf.
Exactly. Okay.
Sorry.
Anybody else with any words of wisdom before I shut her off? No, that's good. Thank you. Appreciate that. Okay. All right, guys. So I'll bid everybody a great weekend, and I look forward to the room next week. Even though I had a bad trade, I did 200 pips in 3 days, so I'm pretty happy with what I've done.
Oh, good job. Thanks, thanks, Dave. Thanks, Roger. I appreciate it.
Sure.
Okay.
We'll do
All
it
right,
again.
guys. We're going to do it again and again and again until we all get it right.
Well, thank you very much.
All right, guys.
Will
Bye
do.
for now. Bye.
Take care. Bye-bye.